All right, welcome to Talk Tickers. Today, we're digging into the latest earnings from KLA Corp, one of the absolute key players in the semi space. And this one's interesting because we've got a situation where the numbers are saying one thing, but the market is telling a totally different story.
And that, right there, is the big question we're tackling. I mean, KLA comes out, they deliver a really strong beat, they give solid guidance for the next quarter, and what happens? The stock drops almost 3% after hours. So what gives? What did the market see that maybe wasn't obvious in those headline numbers? Let's dig in and find out.
Okay, first up, let's just look at the raw results. And, on the surface, this was about as clean a quarter as you can get. Just a straightforward beat, no messing around. So let's talk earnings per share. Non-GAAP EPS came in at $8.81. Now, Wall Street was looking for something around $8.60. So that's a nice, comfortable beat, about 3% better than expected. Solid start.
And hey, same story on the top line, the revenue. The revenue, they pulled in $3.21 billion. Again, sailing right past what the analysts were expecting, which was closer to that $3.18 billion mark. So far, so good, right?
So here's the whole picture, all laid out. You've got your beat on earnings, your beat on revenue, a really strong 13% growth from last year. And to top it all off, the guidance for the next quarter was also ahead of what people were thinking. I mean, on paper, this is a home run. This is exactly what investors want to see. So where did things go sideways? Well, it definitely wasn't from a lack of confidence for management. The story they were telling on the earnings call was incredibly bullish, and it was all centered around, you guessed it, the biggest trend in tech right now, AI.
Yeah, the CEO, Rick Wallace, he was not shy about it at all. He basically called this AI infrastructure build-out a profound change and said it directly fuels their business. The message couldn't have been clearer. The more complex AI gets, the more you need KLA's super specialized process control tech.
Okay, so how does that AI hype actually turn into dollars and cents for KLA? Well, management broke it down for us. You've got leading-edge logic chips getting way more complex. You've got the insane demand for high-bandwidth memory, or HBM, and then there's this explosive growth in what's called advanced packaging. These are all direct results of the AI boom. Oh, and by the way, their services business, which is super profitable, grew an awesome 16%. Not bad. And check this out. This really shows you the momentum. Just look at advanced packaging. This business is expected to grow by a staggering 70% year over year. I mean, this used to be a tiny part of their business, almost a rounding error. Now, it's on its way to being a nearly $1 billion segment for them. And it's all because of the need to stack all these new complex AI chips together. All right, let's just recap for a second. We have a clean beat on the numbers, a strong guide for the future, and this super powerful story about AI driving everything. This is the moment, right? This is when you'd expect the stock to take off. But it didn't. And that brings us right back to that weird disconnect we started with.
And here it is, the whole puzzle on one screen. On one side, you've got the bull case. Everything an investor could dream of. Great numbers, a compelling AI story, strong guidance, and wow, over $1 billion in free cash flow. Then you look at the other side. You see the stock drop, and you start to see what the market is worried about. And really, it all comes down to one big thing: China.
So here's what happened. During the call, management finally put a number on it. They talked about the hit they're going to take from the new U.S. export rules for China. And they said it's a headwind of about $300 to $350 million through 2026. Now, even though the AI tailwinds are huge, the market heard that number, and it hates uncertainty being replaced with a known negative. So it seized on that new risk, and that seems to be exactly what sparked the sell-off. Okay, so we've looked at the good numbers, we've heard the great story from management, and we've dug into what's spooking the market. That brings us to our final take here, the next call. This is where we lay out what we think happens next for KLA. But first, just so we're all on the same page, when we give a rating of outperform, what we're saying is that we expect KLA's stock to do better than the broader semiconductor market, the SOX SOX ETF, over the next 12 months. It's all about relative performance. And with that said, our rating for KLA is outperform. Yeah, despite that knee-jerk reaction from the market, we just think the underlying story here is way too strong to ignore. So why do we think that? Well, our thesis is pretty simple. First, this whole AI thing, it's not just a fad. It's a fundamental structural shift that makes KLA's tech more important than ever. Second, we really think that 3% drop was an overreaction. The market panicked about the China news, but now that risk is actually quantified, and we think the growth everywhere else more than makes up for it. And third, you just can't ignore the momentum in advanced packaging. That's a serious growth engine kicking into high gear. So here's our prediction. You might see some choppiness in the short term as the market chews on this China news, but as KLA keeps delivering, we expect the market to catch on to the bigger story and re-rate this stock higher. And that's our breakdown of KLA's quarter. Thanks for joining us here at Talk Tickers. And of course, a quick reminder, this is not financial advice. Always do your own research and talk to a professional before making any investment decisions.